it's a big day for Ford. As we've been reporting, the automaker saw a 43% sales increase in February 2010 over the same month last year, and Ford beat General Motors in U.S. sales for the first time since 1998. Joining us now from Dearborn, Michigan is Ford sales analyst George Pipas. George, thanks so much for joining us. We appreciate it.
Thank you, Julie.
You know, if you go back to 1998, it was a strike at GM that helped Ford out. What do you think was really the clincher here for Ford surpassing GM in those sales?
Well, our focus really, Julie, has not been on the competition. There's a lot of formidable competitors out there. Our focus has been on the customer and delivering great products. And as long as we keep doing that and making progress against our plan that we laid out a few years ago, I think we're going to be able to continue the momentum as we enter a very tough 2010. 2009 was difficult, but we're starting out, and 2010 looks just as challenging as last year.
Well, speaking of challenging, there was, of course, a lot of snow being dumped across the nation during the month of February. How were you all still able to drive traffic given the snow?
Well, in some areas of the country, it was a real problem. I mean, consumers weren't visiting car showrooms. They were staying home. And in Washington, for example, the town was shut down for the better part of a week. So that did have an adverse effect on sales, but it loosened up in other areas of the country, keeping in mind that our comparisons, while pretty impressive on year, are against a period when the country was in a pretty deep recession, and the prospects for the next several months were pretty dim. Now things are looking up. We look forward to a better year, but clearly the consumer is still pretty cautious.
Well, and that also is reflected in the fleet sales. You saw fleet sales, as our Jeff Green mentioned a few moments ago, is to business customers as opposed to retail customers. You saw a 74% increase. So, I mean, what does that tell you about the recovery overall in the economy here in consumer versus business?
Right. Well, I think it is a positive. I think smaller businesses have a much more positive outlook than they did 6 to 9 months ago. That's what the surveys indicate. And last year was particularly tough for businesses, even more so for consumers. And I think that's why we're seeing a bigger increase on the fleet business running out ahead of the retail customer, because last year the businesses were in a cash conservation mode. And even those that wanted to purchase equipment, such as vehicles, had trouble getting credit. And so for the time being, we're seeing the business customer run out ahead of the retail customer, and we kind of expect to see this in March as well. This will probably continue for another month or so. And
do you think also on the credit front that that is improving for businesses more quickly than it is for consumers?
Well, I don't know if it's improving more quickly. I think it's still a challenge for both the retail customer and the business customer. You pretty much need a bulletproof credit rating to get a home loan or a car loan, and so I think that has eased somewhat compared to a year ago. But you know, I think the biggest problem is the demand for credit at this point, because consumers have a dim view of their job prospects and their income prospects.
So given all of this, I mean, are these sales numbers, a 43% increase like we're seeing, is that going to be sustainable?
Well, an increase like that is outsized owing to the trough that we were in and that the industry was in and the economy was in last year. Our forecast, not only for Ford but for the industry, are not so large on a full-year basis, and those year-to-year comparisons should settle down a little bit once we get away from this very weak comparison period of a year ago. Nonetheless, relative to the industry, we've picked up 3 points of market share in the first couple of months of the year, and that's a positive sign to show that we can still got some legs behind our new products.
And that market share going to 17%, you going to be able to hold on to that?
Well, our planning assumption is not so strong as that. We've planned for an improvement over last year. We were at about 15% last year, and we have a modest improvement plan for the coming year. But there again, our expectations are tempered. Steady as you go. Take each month at a time, and see how customers react to this strong cadence of new products we have in the rest of 2010.
Now, George, I know you said you don't look at the sales versus GM, but you got to be aware of the figures, obviously. I mean, do you think that you'll be able to keep this edge in the coming months?
Really not the focus. I actually had to be reminded by a reporter who asked yesterday, when was the last time? And it kind of took me off guard. Same for Toyota. All of these competitors are extremely strong, but we're not measuring ourselves against them. We're measuring ourselves against the impressions that consumers have of our products.
Okay, George.
And that's where it's going to stay.
George, we are out of time. Thank you so much. George Pipas is a Ford sales analyst.